Hello and welcome to Into Vietnam. I'm Ngọc Anh. In this program, we will bring you comprehensive news about Vietnam's economy during the day and following our major stories on Thursday. Power cuts will start on February the 15th across Vietnam. Olympus Pacific Minerals Inc. announced $25 million plans to mine gold in the Asian country. And Vietnamese starfish has been completely removed from the World Wildlife Fund's red list. The Ministry of Industry and Trade said power cuts would start from February the 15th across Vietnam in a bid to cope with the country's electricity crisis. The local electricity regulators will decide where and when to cut the power.
The Vietnam Electricity Corporation or EVN forecast the demand for electricity would rise by 18% against last year, while electricity production would decline by 14%. EVN reported that the last amount of water in major reservoirs in the north had been released to save crops for the last time this dry season, from February 8th to February 14th. In addition, many thermal power projects will be behind schedule. The government is urging factories and major power consumers to work out plans to save power by at least 1%. This sector used up to 10% of Seoul electricity. The government also required EVN to improve rural power grids to reduce transmission losses from the current 20% to 15% by the end of this year and 10% within the next 4 years.
The Canada-based gold producer Olympus Pacific Minerals Inc. recently announced plans involving some $25 million to revive its mining operations in Vietnam. The plans are based on optimism that it can refine gold within the country without being subjected to a new export tax.
The Canadian and Australian listed miner last December delayed plans to invest $100 million in a Vietnam gold mine due to 10% export tax on unrefined gold. The company now plans to invest about $25 million in mine development, plant upgrades, and a tailings dam this year. The first spending is projected for the second quarter. Olympus Pacific Minerals expects a production increase to about 75,000 ounces of gold in 2012 from a projected 45,000 ounces this year. The company hopes its Vietnam production may reach 150,000 ounces by 2015. Olympus Pacific said earlier it would continue with sampling to assess its local refiners' ability to deliver the purity required for export without the 10% tax. Shares in Olympus Pacific have more than doubled over the last year in Australia.
Vietnam will scale down a World Bank loan for a public investment reform project, and the country will receive $2.5 million to cope with climate change. More details coming.
Vietnamese Deputy Prime Minister Nguyễn Sinh Hùng recently agreed to reduce a foreign loan for the second phase of a public investment reform project. Capital for the project, which is funded by the World Bank, will be cut to $350 million and 35 million euros from the previous estimation of $500 million. Of the sum, $250 million will be sourced from the International Bank for Reconstruction and Development, $100 million from the International Development Association, and 35 million euros from the French Development Agency. Earlier, the World Bank planned to grant Vietnam a loan of $1 billion in 2 phases. The first $500 million loan was disbursed last year. The Nordic Development Fund will offer Vietnam a technical assistance grant of $2.5 million to help the country cope with climate change. The grant, which is administered by the Asian Development Bank, will be used to help Ho Chi Minh City, Da Nang, Thanh Hóa Province, and 2 ministries plan and implement effective climate change response measures. Vietnam will put $250,000 in the project, bringing the total investment to $2.75 million. The Ministry of Industry and Trade is responsible for executing the 2-year project, which is due to begin in May this year.
We'll now move on to securities news. Vietnamese stocks ended down for the first time in 5 days. Local investors took profit amid unchanged macro conditions. On Ho Chi Minh Stock Exchange, VN Index lead 2.36 points or 0.45% to end at 520.23. Liquidity hardly changed from a day earlier, totaling 31.58 million shares in fund units valued at $796 billion. On Hanoi Stock Exchange, HNX Index lost 0.72 points or 0.66% to end at 107.67. The decline trimmed year-to-date gains to 5.7%. Liquidity fell 38% from a day earlier to 17.5 million shares, worth $340 billion, down 37%. Analysts were still cautious of high February CPI and high share supply. The Vietnamese government plans to divest its stake in 281 local companies this year. Particularly, the government will sell its entire stake in 170 firms. Foreign investors switched to net selling 11.52 billion dongs of Vietnamese shares on Ho Chi Minh Stock Exchange. Meanwhile, they continue to net buy 4.35 billion dongs on the northern bourse. The Vietnam Association of Seafood Exporters and Producers, or VASEP, said Vietnamese charfish had been completely removed from the red list of the World Wildlife Fund in 6 European countries at the end of last month. The fund pledged last December to make the removal. Earlier, based on insufficient evidence, the fund red-listed Vietnamese charfish in the Seafood Consumers Guide in 6 European countries. The move implied that the consumer should not buy the charfish, as the fund said the fish-raising method in Vietnam might cause negative impacts on the environment. However, Vietnam then proved that the red listing was inappropriate. Vietnam's seafood output is estimated to total 365,400 tons last month, and the country targeted to export 120,000 tons of tuna this year. More details in the following news.
The General Statistics Office of Vietnam estimated the country's seafood output at 365,400 tons last month. The figure rose 1.1% to 270,400 tons for fish and 4.7% to 30,900 tons for shrimps. Local seafood cultivation expanded 7.3% on year to 161,500 tons. It included 121,000 tons of fish, up 8%, and 21,500 tons of shrimps, up 7.5%. Meanwhile, seafood catches are estimated to have dropped by 3.4% on year to 194,900 tons. Vietnam Association of Seafood Exporters and Producers, of VASEP, aims to export 120,000 tons of tuna this year, up 4.5% on year. This figure represents an increase of 16,400 tons in volume and $13 million in value on year. The country's tuna export surged by 49.5% in volume and 62% in value between January and November last year from the same period of 2009. In particular, Vietnam exported 35,000 tons of tuna worth $135 million to the U.S. during the period. The figures jumped 54.6% in volume and 94.6% in value on year. The country also exported some 170,000 tons of the fish worth $62 million to the EU at the same time.
India has stopped corn and soy meal exports to Vietnam after Hanoi rejected cargoes totaling 50,000 tons over fumigation issues. Analysts say the move may threaten to stoke food and feedstock prices in Asia.
Traders from both countries have said Vietnam could be forced to turn to more expensive South American supplies, pushing up prices in Asia. Vietnam is one of the biggest buyers of corn and soy meal from India, a leading supplier to Southeast Asia. Vietnam was said to have adopted a new fumigation procedure, leading to the cancellations. Exporters are hoping to be allowed to refumigate, something that Vietnam has allowed in the past. The Indian embassy has been in close contact with the Vietnamese side. The Hanoi Plant Protection Branch said the volume of corn and soy meal found with insects had been ordered to be re-exported. Corn prices in Vietnam were around $333 to $349 per ton, nearly 27% up from a year earlier. The problems with imports could fuel prices further. Vietnam may turn to South America for both corn and soy meal, but has to pay about $40 per ton more for the grain and feedstock. Cargoes from Brazil or Argentina may take 30 days to reach Vietnam against an average 13 days from India. Moreover, Vietnam will not be able to source American corn and soy meal in small containers.
That concludes our program today. Thank you for watching. For comments and feedback, send us an email at intovietnam@vitv.vn or give us a call at 0422208288 or 0904 111 686. Goodbye for now, and we'll see you next time.